Audio Jungle. Audio Jungle.
Hi, ladies and gentlemen. Welcome to Asian Land Realty and Starfish Training. And what you have just seen outside just now was the outlook of where our company is. We are based in Petaling Jaya, Selangor. Let me take you on a bit of a guided tour of where we operate from and where we're headquartered. Thank you. Hi, ladies and gentlemen. This is Warwick again. And would like to welcome you to our office where we're based in Petaling Jaya, which is in Selangor, Malaysia. And effectively, we have three companies here. We have Asian Land Realty, Starfish Training, and also Asian Land Auctioneers, also director. So all three companies, I do Asian Land Realty Berhad, Starfish Training Berhad, and Asian Land Auctioneers Berhad. Effectively, what Asian Land Realty does is we are 90 strong. We have 6 license holders with us here, and we have 2 branches in PJ. One is in Denai Alam, which is Shah Alam. One is in Mont Kiara, 1MK, that concentrates on foreign properties. And then we have a branch in Johor Bahru, and finally a branch in Kuching too. So in terms of strength, there are 90 of us, 6 principals. We do a wide range and broad cross-section of the properties that comes from rentals, sales, project, sub-sales, you name it, we cover all the facets. We have very painstakingly shortlisted our employees here to ensure that we would be of not only service to our customers, but add value to their investment portfolio. Thank you.
Today is a very fantastic day. Why? Because we have completed interview Mr. Warwick for understanding about what is Asian Land.
Yes.
And I think you have just now heard about the video. Mr. Warwick has explained Asian Land actually is one of the very prominent real estate agency, and he's one of the directors, which is encompasses for 4 branches in KL, Johor, and also Kuching, right, Mr. Warwick?
Yes.
So I think just now also we have interviewed Mr. Warwick on, he actually is a Starfish director, also is continuously conduct the training courses. So now what happened is that because we always, as a youngster, especially me, are very interested, want to invest in real estate, but how are we going to use the value investing formula to invest in real estate? Because we want to go for low value, low value, maybe low capital to invest with higher return. So I think Mr. Warwick will be the best guy to explain to us what is Kaedah Sambung Bayar, or even like auction. So I think the most important is Kaedah Sambung Bayar. I think one of the very good formula, which is I think Mr. Warwick shared with me. So now I want give this opportunity to everybody to get to know what is Kaedah Sambung Bayar.
Okay, thank you very much, Mr. Tony, for giving us this opportunity. So effectively, if I understand the question rightly, basically there are 2 facets to this question. One is what we call in Malaysia Sambung Bayar, which is basically mortgage rescue, so to speak. And the other facet of the equation is auction. So what I'll do is I will address these 2 specific issues specifically.
Okay.
And to get the ball rolling, I will start off with Sambung Bayar.
Oh, okay.
So let me just give you a little bit of a background, a holistic approach to the entire equation, which is very, very linked to the economy. Okay. So effectively, as we have always shared in the past, that business, whether it's property or what have you, is always cyclical. For some strange reason, they tend to say 7 years of feast and 7 years of famine.
Okay.
So, but what really makes sense now to add meaning to the Sambung Bayar would be the statistics and data over the last 4 years. So we will use 2011 to 2014 or even 2015, the last 4-5 years. On the average in the Malaysian context, there are about 440,000 SPAs that are attested. So over the years, of course, the number of SPAs, the attestated, actually signed, sealed and delivered, have been reducing. In fact, last year's statistics from a high of 446,000 in 2011, last year saw a reduction to as low as 386,000. So, but the interesting feature, whilst actual transactions have reduced in terms of volume, but the actual value has risen from the initial 138 billion for the entire asset classes. The value has risen actually to 165 billion. So okay, now this will then add weight and give basis to why this Sambung Bayar is getting in.
How it works, yeah.
Yes. So if you look at it, every cycle there are 4 facets to it. You've got your boom, then you've got your retraction, then you've got your bust, and finally you've got the recovery. In the boom situation, people tend to throw caution to the wind. Similarly with financiers, with banks and lenders, they become very, very aggressive. So sometimes in your aggression to meet targets and what have you, you tend to compromise on certain lending standards or certain requirements. So now the principal guiding factor that glues this whole thing together is actually the loans to deposit ratio. So now I am told that it has geared to 92%. In other words, the total loans in the banking system are 92%, and the loans, sorry, my small correction, the total is 100%, but total loans expended is 92%.
I see.
Okay, then there's something known as SRR, or Statutory Reserve Requirement.
What's that?
The Statutory Reserve Requirement is the amount that banks should have with Bank Negara.
Okay.
So recently, because the liquidity situation got a little bit tight, Bank Negara gave the green light by reducing the Statutory Reserve Requirement from 4% to 3.5%.
I see.
What the half-point reduction actually meant was, saw the system being flushed by additional 6. So this perpetuates and lends credit to this theory, this 4-quadrant theory. Okay, so we have now come to a juncture where the loans to deposit situation is nearly at its hilt. We have come to a situation because of the retraction and the correction basis. Fair number of companies, because of new technologies, maybe they were top heavy, because there's slowdown in actual market consumption across the board. Because in the Malaysian context, we are actually a huge manufacturing concern, and SMEs or SMIs. But since of a waning interest in developed countries due to cost-cutting measures, similarly, it's a chain reaction. People start when pay cuts, when people start working for shorter weeks, when people start actually being asked to go on VSS. What it actually really means is that is that much less money in the system. When there is that much less money in the system, it means that the economic activity and the economic pie chart is being skewed. And in a situation like this, suddenly you find defaults coming into place.
Oh, that means they can't afford to pay.
They can't afford to
cannot
pay because yes,
pay.
they would have maybe had a cutback. Because sometimes they may not ask them to leave their job, but they tell them, okay, 4-day week maybe.
I see.
Then you go on a cutback on your salary.
So if such case happen, then they can't afford to pay, then any solution that the bank will actually provide to them, or they just take their home, or?
Okay. In normal circumstances, when it comes to the bank, you will see the lending process is such. Normally, they'll be very aggressively, they call them the mortgage sales processes. So they very aggressively will market the loans of the banks, depending on the asset class. It could be residential, it could be commercial, industrial, and what have you. And then afterwards, when the loan has been processed successfully, it's brought back and there'll be someone who will be managing it. These are the mortgage officers in the mortgage department who oversee to ensure that the loans are being paid. But if the economy is chugging well, there's sufficient liquidity, there are jobs, people are buying, then obviously there is activity and trade going on, it's fine.
Oh.
But as we shared earlier,
Okay.
where the banking system itself now
Yes.
is coming under the
Can't
strain,
afford to pay,
you
yeah.
can't afford to pay.
So?
Then the next step normally here, they call it mortgage recovery officer. The role of mortgage recovery officer is now try to recover from the defaulter. But when the defaulter obviously doesn't want to default, but because he has become a victim of the economic circumstances,
Yeah, maybe they lost a job, get retrenched.
yes,
Yeah.
and no more money flowing in. Then of course the mortgage recovery officer can apply all the pressure on them.
Yeah.
To my mind, it's like trying to squeeze water out of stone,
Yes, yes,
because there is nothing left in there.
yes.
So then the next step to complete the banking process will be to take the property for auction.
Oh.
But there is a downside in taking the property for auction, because even auctioning, which I'll explain later, has its process and procedure. So even though if your loan amount is way below the market value, you would have to start off with the first auction and then each time there are no takers, it will come down by 10% and reduce. But during this reduction process, there is no free lunch.
Yeah.
The interest is still interest is still running, so to speak.
Okay.
So that interest is just adding on to your loan amount. So you have a double whammy of a situation here.
True.
One stage you are unable to service, you have lost a job or you have taken a pay cut. Normally in situations before going to a bust, the price of things tends to rise.
Yeah.
Inflation comes in because the purchasing power of the currency could have been weakened.
Yeah.
So this is like a whole ton of bricks falling upon you. So then if you take it for auction, there is no guarantee there are going to be buyers.
So let's say we want to participate in this Kakaidah Sambung Bayar, will it be benefited to us? Okay, can we make money out of it? And
Yes, I think this business of Sambung Bayar, or this business of mortgage recovery, or this creative financing has been going on for generations.
It's very long time already.
Yes, been going on by money lenders.
I see.
And
All money lenders doing that.
has been doing that all the while.
Yeah.
So, because the whole idea is for the loan, not to allow the loan default to take place.
I see.
Because as far as the bank is concerned, for them is they are a net borrower themselves. They have borrowed from the investing public. So they cannot afford to have the chain upset, because they are statutorily duty bound to pay the fixed deposit or the bond holders or people of certain financial instruments and XYZ.
Yes.
So this has been coming slowly in, but each segment will have its own peculiarity. So here we would like to call it as mortgage rescue.
Mortgage rescue.
Mortgage
It's
rescue.
like we rescue them.
So it's a win-win for everybody.
I see.
Win-win for everybody simply because then the defaulter doesn't default.
Yeah.
The bank doesn't have many NPLs, and at the same time there is sufficient money within the banking system to allow banks to do what they're originally supposed to do, is to keep on lending and speculating. So now to share with you an example of how this thing works. Okay. Like for example, if there's a property, recently there was one case that was done in Rawang, and the market value of the property was 430,000.
430,000.
Yes. It was a double-story terrace house. It was 20 by 70. Rawang is about half an hour's drive. It's on the northern side of the city of Kuala Lumpur. And what happened was the guy's mortgage, total default loan was actually 180,000.
Okay.
So that was his loan redemption. They would speak 180,000.
Okay.
But he had already painted himself into a corner, and I think he had already exhausted himself to the max when it came to his financial resources.
I see.
So the next stage was going to go for auction.
Wow, which is a waste.
That's
Which is a
where,
waste, yes.
from the perspective of a case study,
Yes.
we then suggested to him, let's have a win-win here.
Okay.
You will have to take a haircut of sorts.
Okay.
For us, it's also a risk. But most importantly, we didn't have to take a loan.
I see. So we just continue pay whatever they are paying right
But
now.
before that happens, We have got all the legal documentation in
That is
place.
documented in the law,
Yes,
right? Proper, right?
yes. We are working very closely with.
Will it be safe?
Oh yes,
Oh,
it's very.
okay.
We have all the place, but as in business, there's always certain degree of risk, but this is a calculated risk. We on our end have done our very best to minimize risk.
I see.
The very fact that we come from the perspective of a training company, of an auctioning company, and also a real estate agency,
Yes.
we have the manpower and resources to
I
very
see.
quickly push this off. What is missing in this element here is a luxury of, because as far as banks concerned, you are defaulted 2-3 months,
Yeah, you
we
try
want our
auction.
money back and they want the auction off.
Yes.
So we strike a deal known as mortgage rescue or lease options.
Okay.
All the legal paperwork is in place,
Okay.
and then in this particular instance, market value was 430. The bank valuation from 3 different banks was 360 to 380,000.
Okay. Okay.
So we locked him in at 300,000, and then we service his loan for, because we have the opinion it takes 6 to 8 months to move a property out, to sell a property. So we locked him. We lock him in for a year. So it's a risk.
Oh.
It's not as if we're locking him in forever, but we're locking him in for a year.
For a year.
But subject to certain terms and conditions, or we call it condition precedent.
Yeah.
So on his side, he must take cognizance of the fact that he has come to the end of his road.
Okay.
He is no longer able to service the loan
Yeah.
because of whatever financial circumstances that he may be having. He also must take cognizance of the fact that it cannot be a situation of
Winner
because someone
takes
is
all,
coming
yeah.
to rescue from a defaulting mortgage. Obviously, it has to be a win-win. So in this case, again, very quickly to reiterate, value of the property 420, 430.
Okay.
Total loan redemption amount 180. We lock him in for 300,000 because the valuation report is for 360.
60. Okay.
So in this particular case, we paid the installments for 8 months.
Okay.
And the thing about people generally is, if they're living in the house, many of these defaulters sometimes live in the house. It's their
Yes,
family
yes,
home.
yes.
So there'll be a great social stigma if they have to ask to leave the house abruptly,
Yes.
or
yes.
there's an auction that is conducted,
Alright.
and there are notices that are pasted on the gate.
Yeah.
It will also have a lot of psychological effect, not only on the borrower but also on the family.
True.
So in a situation like that, he gets to stay in the property, and then he pays maybe a nominal, I guess, a full month's rent of the market rate. He could just pay maybe half month, so he
I
gets to stay there. But the win-win is, should there be prospective buyers or customers who want to come and have a look at the place, then they should allow them to come in without creating any hassle or inhibition.
Also, if I can hear loud and clear,
Yeah.
it means that valuation is 360.
Yeah.
Then we're locking at 300.
Yeah.
So we actually profits about 60k.
Yes and no,
Okay.
but it depends on how fast the property gets sold.
Oh, I see. So if we pay for about like 1 month is about 1k, then let's say we pay for 6 months, very lucky, then the property sell or sold.
Yes.
Then we pay about 54,000, right?
But most importantly here is,
Yeah.
we are going on the bank valuation price rather than the market value price.
I see.
So the difference normally with bank valuation price and market valuation price could be about 60,000.
Yes.
So for the investor, herein exists investment opportunity which we will be sharing and also be providing this sort of stock to possible investors. Is actual returns on cash investment.
Oh.
So in this, what actually happens
yes.
here, assuming you service the loan for 6 months, say your total cost is about 15,000.
Okay, 15,000, yes.
15,15. And then you manage to get a buyer for maybe 360,000.
360 at
Which is
valuation,
at
maybe.
valuation price, but which is also way below market price.
Yeah,
And
definitely.
also enables him to get a better margin for the loan.
Yeah, yeah.
So what happens is you have only actually come out with a net outlay of about 15,000 or maybe maximum 20,000. But you are able to sell from the lock-in price of 300,000 to 360,000 is 60,000.
Wow.
So 20,000 investment is giving you 60,000 in returns. So
Wow.
actually in 8 months, you're getting a returns of 300%.
300%, yes.
So what it really means here is your returns on actual cash invested.
Yes, I understand now. Yeah.
Actual cash invested, and what
Yes.
are returns on your actual cash that has come out. But everybody is aware from the very outset of the journey, the defaulter knows that he's going to take a major haircut. The defaulter is aware that the property is going to be sold below market value.
I see.
But because the circumstances are such, he does not have the luxury of asking the price that he wants.
I see.
So it is a win-win for everybody across the board, but most importantly for the borrower, his credit standing is not affected. Because the minute he's a defaulter in the true sense of the word, the property is auctioned off, then he will have a black mark on his credit
So
history.
the credit bureau, right?
Yes,
Yeah, they cannot get the loan anymore.
Yes, yes. So this is a good form of actual investment. That means a real opportunity cost on cash invested.
Oh wow. So thank you so much. I think thank you to Mr. Warwick, which is explained about what is about the Kaedah Sambung Bayar. I think now we understand better about what is Kaedah Sambung Bayar, because keep on hear about people say Kaedah Sambung Bayar, but we don't know what is that, and we don't also even not know how we can actually benefit on that and make money on that. Like I think the one thing that catch my attention, which is we just put in 15,000, then we'll be able to sell it within about 6 months to 8 months. So we're going to actually can generate probably about 40 for us. 40 or 50 or K, right?
Yes.
Just because let's say 60K minus about 45.
Yes.
So which is I think is a very good return. Then I think I will seek for you to talk about this better later.
Sure.
So will we have a chance also to invite you to share this maybe in our upcoming seminar, which is explain to more people about what is this Kaedah Sambung Bayar. So I think we are waiting for this. Okay, so there will be no obligation. We're coming down. Okay, Mr. Warwick will actually take the time to share with all of the investor or even those who are interested to know more. Alright, so thank you so much for Mr. Warwick. Thanks for your time.
Thank you very much.